Good evening and welcome to the Australian Stock Market Show. Now, with the All Ordinaries Index down last week, we asked the question, has the momentum changed and will we see a new all-time high this year? Stay tuned as we'll discuss our thoughts on that shortly. We'll also take a look at the sectors in the Australian market, and for our main topic in tonight's show, we get into whether now is the time to buy cheap stocks in order to 10x your growth. First up, we'll share our hot stock tip for the week, so sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some important questions around the market. Tonight we're excited to share our thoughts on some great stocks like Bank of Queensland, Worley Parsons, TPG, Zip, Kogan and more. So get comfortable as we'll get into those soon. I'm Dale Gillum and I'm your host for tonight, and joining me are two of our team of highly experienced analysts and professional traders, Janine Cox and Pedro Banales, and together we're Australia's most trusted stock market educators. Good evening, team.
Good evening.
Good evening,
How are you?
Dale.
You know, I when I was on holidays, I had a rude awakening.
Really? What was that?
Well, I realised that I was saying Pedro's surname wrong for years. How bad is that?
Yeah, well, Phil said it correctly, and
I know he taught me a lesson.
Yep.
Very valuable lesson.
It is, yeah. Always saying it perfect.
Well, welcome back to the show. You're in place. Phil is having a well-earned week off because we stressed him out too much by having him in my seat. So but he will be back next week anyway. But tonight, as mentioned, we do get into the sectors in the Australian market. But first, let's take a look at this week's hot stock tips. So, Pedro, what have you got for us tonight?
All right. Well, the hot stock for tonight is GDI. So let's get straight into it. So on your screen right now, you've got a market index. And the stock is in the real estate sector. It is a REIT. So the market cap is 341 million. So it's kind of on the lower end of the spectrum. Dividend yield is nice, 7.87%. PE ratio is a little bit high. So it's a little bit more of a speculative stock. It's not one for everybody, but the chart is looking quite nice. So yeah, what do you say?
So is this more of a trading one, or because of that, or are you talking about is it something a little bit more medium to longer term for people?
I would say it's probably more the shorter term, and you'll see why on the chart, because it is kind of showing that at the moment. So yep, on your screen right now, you can see the monthly chart on the left. Let's expand that out. Now, this is where technical analysis is amazing. Like, you can see these lows here on the 80-cent mark. Look how many times it found support at these levels during 2015 and 2016. That's the 80-cent level. Then it rose up to the $1.60 level. So it doubled in price, basically. And then it fell, had that huge fall in COVID. And look where it found support, right back up into that 80-cent level, right? Now, going towards the right-hand side of the chart, it kept trending down, did find some resistance around that 80-cent level, came down, it's found some support around that 50 cent, and it's actually crossed over this momentum line, as Dale and Phil would call it, and it's found some resistance recently at around that 70 cent mark. So it's closing a little bit low at the moment, and let's have a look at the weekly chart really.
Well, that's only yesterday and today, so
basically,
as they say, the professionals close the market, so watch what's happening at the end of the week.
Yep, and 2 days don't make a sheep station, as you would say. Right?
But it's all about confirmation, isn't it? So it's not ready yet, is what you're saying.
It's not ready yet, no. So this is why I was saying that it's a bit of on the speculative side, and it is a shorter term proposition.
Well, I'm sure everyone would rather hear about this before it's already shot off, though. So.
Exactly. So we're looking at the setup at the moment. We're just putting our analysis on and just seeing where it could possibly find support and where we could confirm that it's actually stopped falling before taking the entry, of course.
Well, that's really wise, because a lot of people, I mean, you can't buy yesterday's returns, and often people jump in on stock that's already been moving. And they should have been looking at a stock like this before it starts to move. So wise words from you anyway. But thanks, Pedro. But that is it for our weekly hot stock tip. Now, shortly, we're going to get into our topic for tonight. But before we do, right now is your opportunity to get involved in the show and have your questions answered. Remember, we prioritise phone callers, so call now on 0392909999. 88, or you can text your question to the number on the screen. Now, the first caller into the show gets if I get it the right way, gets a free copy of my book, Accelerate Your Wealth. So make sure you pick up your phone and dial 03 9290 9988. And while you do that, tonight we'll give you our thoughts on the
Sectors?
on the sectors in the Australian market. So let's get into it.
On your screen right now are the sectors of the Australian market. You can see a nice little list there. At the top of the market is information technology, which has shot up again, looking nice at 40.9% there, and just below that financial. So these are the two sectors at the moment that are leading the market and miles ahead of most of the others, which is good to see. We've seen a bit of a run on the banks lately, which is interesting, and a lot of the banks actually came out and decided to cut people's deposit rates, which is nice of them, wasn't it? You've got a story on that.
Oh yeah, the NAB actually cut interest rates from 0.5 to 0. So there you go. How's that for a return?
There you go. So what did you say? Thanks very much.
I said thank you for your business.
All right, and at the bottom of the screen there, I'm just going to go right to the bottom. We've got energy. Now you can see energy and materials are an opportunity here because these are the ones that are lagging. The rest are minus 20, but it doesn't mean that they're ready to go yet. You've got to get that confirmation obviously first before trying to pick the eyes out of this sector. BHP and Rio are still down, FMG still down, but I mean, we're just rubbing our hands together on that.
Oh,
aren't we?
for sure. When you see something like that, when you see the energy sector and materials down there at minus 20%, that just screams opportunity when they do turn.
All right, and so in the middle of that, okay, we've got real estate sort of heading up towards the top there. Consumer discretionary is nice and high, up almost 15% so far for the year. In the middle of the board, we've got industrials and healthcare. I'd say there's probably more room to move in those two sectors. And still on the lagging side of it, utilities. So utilities have been doing okay. I mean, that's not huge, but there's still room for some upside there with some of the utility stocks. Consumer staples, we've seen Coles take off recently. Woolies is still looking interesting as well, but it's down from its high. Communication services is actually flat as well. So you could really sort of bundle that in, even though it's not as bad as energy and materials in terms of the downside at the moment. It's not going anywhere yet. Yeah,
that's pretty much Telstra there, isn't it? It's, but although Telstra is looking good, I'm not sure if we're going to show that. Yeah, it's starting to look a bit better.
You know what's looking good?
I like how you said a bit better.
Yeah.
A bit better, yeah. It only had a temperature of 103, now it's down to 98.6. So it's actually looking a bit better. But yesterday on my market report for Talking Wealth, I actually brought up the RRG graph on the energy sector, and there are some seriously, I reckon there's probably 8 or 9 or 10 stocks that I looked at that were pretty good right now. So those of you watching who are members of Talking Wealth, check out my report for yesterday because there'll be some great stocks in there for the energy.
I've got something else to show everybody. If we just take a look at this for a moment, look at the chart. You can see here, if I switch it, we've got all my charts shrunk. What happened there, Pedro?
Look at that. Oh, I don't know. The chart gremlin has been in there.
Shrunk. You can see there, if I just bring that across, at the top there, and it's in very small writing, we've got the information technology sector. So the two sectors that are leading the market, information technology and financials, and how this chart actually makes it really stand out for us. And we can see how they've been moving together. And I guess if financials were not doing well, are they doing well on the back of info, or is it the fact that there's money around to fund that info tech side of things? And when you see financials doing well, infotech doing well, geez, that points to a boom, doesn't it?
Yeah.
Well, it does, but again, I want materials and I want energy and healthcare to start moving up. And at least if they don't move down, the market will go bullish.
Yep.
If they're just sort of getting above that zero line, then everything's going to be rosy if there's information technology. But more importantly, if financials keep going, that's the big one.
Yeah.
Materials
Well, look, I'd be
up.
expecting the banks to take a bit of a breather soon.
Well, yeah, Commonwealth Bank does not want to go down, does it?
Well, we may see some rate changes soon, so we've just got to wait for that.
Well, I think you'll be waiting till next year for those. But anyway, that is it for our thoughts on the sectors in the Australian market. Now, before we get into our first email, remember, to get your questions answered live on air, you will need to text or call into the show. You can also send your questions to info@wealthwithin.com.au and we'll answer them in next week's show. Now let's get into our first question. Alrighty, with the banks running hot at the moment, Paul is asking, hey guys, wondering about your view on the Bank of Queensland. I've been watching it for a little while now. It looks to have found some support above $6 and has been making higher highs and lows. Also broke the recent downtrend line and today broke above the more recent $6.45 resistance. Would love your thoughts. So how about we go to you, Pedro?
Oh, yeah, well, yep.
Janine loves banks, so I'm going to go to you.
Oh, really? I thought you were going to Pedro.
I am.
Okay.
You're not going to...
You're just being cute, aren't you?
You're not going to get a different response from me. I love this one, actually. So BOQ is looking quite nice with you, Janine. So let's get straight into the chart and have a look at that, what Paul's talking about. So it has broken above. Let's expand the weekly chart a little bit. So it has broken up above this.
So that's 645, and it's across some of those peaks there that we can see on the chart. This one here, what's that?
That is that.
It's pretty close. Yeah. There's probably 3 levels there, aren't there?
Yeah, definitely. And if we can just put this trend that he's talking about, so it has crossed above there, and it's just gone sideways for a bit, but that's not a bad sign. So the fact that it's not falling below this low of $5.70, and it just refuses to fall below it, and it's even found support around that $6 level, like you mentioned, and now look, it's closing nice and high above that resistance level, that previous resistance level. I reckon that this one could actually go up to that high of $7.30 around that. Yeah.
Fantastic.
I'd be happy with that.
So there's still some upside there in Bank of Queensland, is what you're saying?
Yeah, I think there's plenty of upside. If we put a price percentage rule, just say from that, if you were to enter around this level, so say 20% upside to that $7.70 mark. So,
and would you say that that's sort of normal for a stock like this, given Bank of Queensland, it's a second-tier bank, you know, it's not one of the big 4, but is it possible to make 20% over a short period of time, or is it going to be many months? On
a second-tier bank like this, I think it's very reasonable. You know, you see banks like Ben have done quite well. You know, that's a second-tier bank. And what surprises me is that they actually came out with some pretty poor earnings report, and it actually didn't go down on that news. So
that shows you how strong financials are. Anyway, we do have a text now. This one is from Nathan. And Nathan says, "Hi guys, I'm just wanting to get your thoughts on the outlook of Coles. I'm not currently holding it, but do have it on my watch list. I'm wanting to see if it can break through the all-time high on this current trend." Do you want to take that one, Janine?
Look, I mean, Coles has been a bit of a dog stock, hasn't it, for a long time, but it has changed now.
I think it was in bed with Telstra.
We're seeing a trend, but it's still really part of this sideways move across here. Now, we can see there that's at around, $19 there across the top. And across the bottom here, we've got sort of around $15.50. But just because it's gone to this high doesn't mean it's going to keep going straight through it. It's more likely to pull back. And I guess because Coles is Coles. What's it done in the past few years? It's really got stuck moving sideways.
They had a good report, though. I mean, obviously, Woolworths' report was better.
Yeah, but it's already factored into the share price.
Well, yeah, but you think, you know, we're in a recession, that we're not in a recession. But you've got to think they're doing pretty well in a recessionary environment. You can't tell me people aren't hurting out there.
The discretionary
they've cut costs
sector.
And they've saved, you know, like on theft. That's one of the big areas that they saved on. But how much more of that cost cutting can they do, and where can they, you know, eke any benefit from here? That's what I'd be wondering.
There's not much more upside on Coles.
In the short term, I'd be saying there's a pullback coming.
Okay, well there you have it.
Very reasonable.
Yeah. Anything from you?
No, I agree. I mean, I'd be watching it right now and just making sure that it does break above those levels before doing anything. All
right, there you have it. Now, Dave's been back testing and has an interesting situation and that he needs help with. And he writes, "Hi, Dale, Phil and Janine. I'd like to know how to set a stop loss on a stock that has had a very strong upward trend that you can't get a trend line underneath and has no recent lows. This is something I've never experienced before, and I've been backtesting a stock that has done this. I'd like to know how you handle this so that if it happens, if and when it happens, in real trading, I know how to manage the profit and exit at the right time." Do you want to take that one, Janine? I know you're good at this one.
I'd say hold your breath. Like if it
told you.
That's not a technical.
If a stock's actually gone up so
He's not a deep diver.
if a stock's actually gone up so strongly and there's nothing underneath it, all you can do is wait for something to unfold on the chart and to find a trough or some sort of signal on the chart, a setup that'll give you an opportunity to set a stop loss. That's as simple as it is.
Well, how many times have you ever seen a stock go vertical, number one? And number two, how many times have you ever seen them go vertical and not give you a trough or not give you something that you can use?
One depends on the volatility of the stock, the liquidity of the stock. If the stock is a low liquidity
How
share,
many times? That didn't answer that question.
I can't give you an exact number. Jeez.
Lots is the number.
Look, you asked me for a number. Okay, 50. How's that?
50. Okay. So it happens lots. But all I'm saying is, how often do you see a stock go vertical and it not give you a trough or something? Like I know I was trading a stock in my early days and as it was going vertical and vertical and vertical, could not get a trend line on it for love or money. Then I finally got a trend line on it and they gave me the sell signal 2 weeks later. It was like right on time.
Look, I mean, I've traded stocks that have actually dropped 20% from the peak. Instead of and haven't given you a proper exit at that point.
Yeah,
until
but do
that
they
point.
now normally then turn around and start moving up and give?
Yeah, but it's not normal for a stock to do that. Often you'll get an exit at the top if you've got really good sets of rules to follow and have done your back testing. You'll be able to find a way to get out of a stock like that.
And you could even go to different time frames. So if it depends what time frame you're trading at. So if you're on the monthly chart, you may not get a signal there. You may want to go to the weekly chart, maybe even down to the daily chart, see if you can get an exit there.
I mean, I think a lot of the question, when I often read behind the question, and obviously in my reading behind his question, it's, well, what happens if it starts to fall? I'm losing profit. So how do I secure the most amount of profit? And at the end of the day, it's generally you will. So you'll be able to secure a profit because you will get a trough or will get a technical exit point. But as Pedro said, you can go down to that smaller time frame.
It's also too thinking that could be one trade for that particular stock. So over time, if you're trading that stock, it could be 1 out of 10 trades that does it. And then, you have to just have confidence that at some point, like you say, you will get an exit.
Well, you will, and it just depends on your level of trading expertise. Because I know it was one day you were chatting to me, I said, I want to buy this stock, but we're only going to hold it for 6 weeks. And it shot off like out of the blocks like a racehorse. And then it gave you the sell signal 6 weeks later and we got out of it. And I think I'd forget what we made.
I think it was Illumina from memory.
Yeah, it was something like that. But it was like, I went, wow.
Which got delisted. I was pretty annoyed about that.
Just in time.
It's an annoying thing for, she makes a lot of money for our clients out of one stock and then it gets delisted. Isn't that great?
Yeah.
But it is. It's just one of those things. It just depends on your analysis, how you handle that. I mean, obviously my book, for investors, I talk about if a stock, falls 15% from a high, then you could exit at. But that's not a technical signal that a trader would use. There's all sorts of different rules you can be using depending on your level of knowledge and skill and how you want to trade and the type of trading. Because I've had so many stocks that I've traded myself that have gone vertical like that, and I've always got some sort of signal to exit them before it's too late. But anyway, any last words before I move on?
I'd just say
that was important.
Yeah, and I'd just say just draw a line in the sand. That's the most important part, just making a decision, not just leaving it for, to do what it wants. So
all right, well, I'm deciding to move on right now. And that is it for our take on the stocks that are in a blow-off pattern. Now, we all know that to double your money or even multiply your investment tenfold, you need or you have got to find cheap stocks that are trading well below their highs with the potential for growth. But that's only part of the story. You've also got to know how to spot these opportunities using the right analysis so you can get in early at the safest time. Now we'll show you how to do that shortly, but first I do need to share some tough love with you. Now my aim is, as always, is to help you understand what you need to do to be a more profitable trader. Now to my tough love. Some of you are so desperate to make money that you're willing to hand over your hard-earned cash for a stock that is still falling in value. Now this shows you've failed to do proper analysis, and that's gambling. And worse, many are oblivious to what they're doing. Now I'm going to talk to you about this, Janine, because you've had a lot of people in the past that you've mentored to help with this. So
yeah,
what's your take
the
on it?
falling stocks and catch a falling knife scenario, it's huge. And at some point, I think everybody experiences it. So, whether it doesn't matter how old you are, what your knowledge level is, You will do it. The point is that, one, yes, you are crazy if you do. That's the first thing. And the second thing is that there are ways to actually find when a stock is bottom. So you're on the right track, because you've got to buy low and sell high.
You do.
That's it. Or buy and then sell higher. That's obviously the ultimate goal in trading the stock market. So we're going to actually show you at some point tonight, shortly, how to actually do that more safely.
No, I agree with you. I totally agree with you. Now, one of the highest risks you can take in the market is to buy stocks that are falling in value. Now, people who are doing this are failing to recognise direction and strength, and are often just trying to buy cheap, as they think once a stock has fallen 30 or 40%, the only way is up, right? Is that what they say to you, Pedro?
Yeah, well, I've heard that many times, and no, unfortunately that's wrong. That's the quickest way to lose your money, actually. I mean, buying a stock just because it's fallen 30%, it's crazy. I know we do want to get in before the masses get in, and understand that. You think that the stock is cheap, and you want to get in before it moves against you or moves in the direction that you would want. But there's certain ways to do that, and you need to confirm that it stopped falling.
Well, I know Domino's at the moment. I looked at that yesterday on my drive report.
Oh.
It's down like 70,
That's a
nearly
disaster.
80%. So, if you're trying to, and when people, and I know on this show people have, emailed in saying Domino's because it was cheap. Went up a little bit and then they got stuck out of it. So,
And hopefully they put a stop loss in place and got out.
Well, I can't
bet on it?
guarantee that anyway. Anyway, but I like the sound of what you're talking about, but that catching a falling knife that Janine was talking about as well. Now, why do people continue to do that? And, what are the risks for catching a falling knife, Janine?
Okay, so mostly it's about FOMO. So people want to try to get in at a cheap price. And we hear Pedro and I were talking earlier about Warren Buffett and what he's got to say. He's always talking about,
Exactly. Buy when there's blood on the streets. Buy when the stocks are cheap relative to their intrinsic value.
But what's cheap?
What's cheap? Exactly. I mean, is 50% cheap? Is 60% cheap? What exactly? What signals are you getting to
and
let
that's
you
the
know?
problem, isn't it? Because when it's falling, if you're thinking I've got it cheap at 40%, it could go to 90%. Which some stocks have done.
Domino's is heading there, so people thought they got it cheap on that. It's going further south anyway. But you are both right. Now, this quote says it best. It's from my first book, How to Beat the Managed Funds by 20%. If you still have not read it, make sure you grab yourself a copy. It's for free on the Wealth Within website. All you got to do is just pay the postage. For those in the know, timing the market is everything. Timing the market is about buying low and selling high, which is where the small investor has a huge advantage over fund managers. So that's from my first book. Now, some believe buying low means buying at a 52-week low, which in my book, pardon the pun, is buying as if you are blindfolded. It is not a good strategy. Buying low is really about buying based on confirmation of a low and not speculating. It's pretty much guessing that it occurred, hasn't it, Janine?
That is guessing. And the thing is, there are a lot of checks that you need to do and put in place to actually confirm that a turn has been confirmed. And it's about probability. So there's no 100%ers in this, but you actually want to put the probability on your side of actually picking that turn. It's about the timing of it all. So it's so important, isn't it?
Oh yeah, I mean, I don't know how many times I've had somebody that I go, why did you buy that stock? And they go, oh, it's hit $1 or hit $2. I go, and what?
Or they say, I'll buy some more if it keeps falling.
Yeah.
They'll justify it that way. Says
the best traders never.
Yeah, exactly.
So, a big mistake many who are new to the market or market makers failing to really properly understand the market. Now, if you buy when a stock is falling, you are practicing the hope and pray method. Now, I know we talk to a lot of students about this buy and pray, hope and pray method. Pedro, what are your take on it?
Yeah, well, that's a lot of students come to us, and me having to do the intro course with the students, I hear many stories, and you do always hear about those. Then a lot of people know how to buy, but unfortunately don't know how to sell. So that's that buy and pray method that you're talking about. So when it comes to buying the stocks, a lot of students, they say that they bought cheap, especially during COVID, when the stocks fell, that 30%, they bought them cheap. They got a good run on it. They made some good money, but then they lost it again in the 2021 market correction. So it's knowing how to buy well.
But once they've got experience, because it takes a while, so it takes 2 to 5 years to get that experience. So when you're first learning, you've got to try different things, don't you?
Exactly.
And,
Yeah, but that's what Pedro's talking about. It's, I mean, Pedro, all new students, Pedro gives them a call and then they tell him their stories.
That's right.
So that he can help them and work them and mentor them through the course. And these are the stories he's hearing, that they're doing exactly what we're saying you shouldn't be doing before they come to us. So
yeah, well, knowing that information and doing the course is part of reducing your risk.
Well, the course fixes all of that anyway. Now, those short-term rallies where a stock bounces after a strong fall can be a real trap. And I mean, we call them suckers rally for an absolute valid reason. They can severely damage your financial bank account, and even worse, they damage your psychological bank account. Initially, those with little or no knowledge think they are geniuses for buying while prices were falling, but the secondary fall turns a profit into a loss. So as you can see, it's critical that you know how to determine when a stock has stopped falling. Now, I know you've got some thoughts on that and how to help people identify when a stock stops falling, Janine.
Yeah, most people can understand the concept of reversals. So when a stock is reversing and the momentum or the change has occurred. So if a stock has been falling so heavily, you can physically see that on a bar chart. That's why we love to teach people how to read a bar chart. And I can remember in the early days, and I used to have 4 different types of charts on my screen and be looking at that. And you'd say to me, look, the goal is to be able to read it off the bar chart and to understand the psychology. So one of the biggest things is actually understanding the psychology and the direction of the market and what people are doing from day to day, week to week and month to month by looking at those bars.
Absolutely. Now, technical analysis is so important. Though sometimes we do get questions about fundamentals, and those of you who prefer it, I will say that none of us here on the panel will buy or sell unless we get technical confirmation. Now, how about you let us know your preferences? Is it technical or fundamental analysis you prefer, or both? Comment below the video after the show if you use either technical or fundamental analysis, as I said, or even if you use both of them. Now, I want to get into how important fundamentals are to a trader if a stock is falling. Now, I'm going to go to you on this one, Pedro.
Yeah, well, my answer is not very. As a technical trader, we do take some of those ratios into consideration. So things like the P ratio, as we were discussing earlier. So of course, if the stock has fallen heavily, the P ratio is going to reflect that as well. So that's the price to earnings ratio.
But some people, don't they use those fundamentals as an excuse to hold the stock?
Exactly
right.
right.
It's got food fundamentals. Oh, it's good. It's about to discover a new well or a new mine or gold or something.
Exactly. And it's all about the sentiment. It's all about the speculation from the traders. So the trading market is separate from the actual company in a way, if you know what I mean.
Yeah. It's not hard to watch a stock chart go down and know that it's going actually down. If you're not sure, just give it to a 6-year-old. All right, well, now it's time we get into the charts and give you some examples. Now, in these examples, we will share how you can take less risk and as a result, you make more profit. Now, we've got a list of stocks that have experienced significant falls. Now, we're about to find out which ones could be the best cheap growth stocks in the next year or two and possibly multiply investment by 10. Now that's a mozza of money. So let's get to the charts, Janine.
Great. And we're actually not on my preferred stock at the moment, but this one is Zip.
Oh,
right.
Okay.
I can't wait for your preferred one, then.
Yeah. This is a preferred one, right?
Oh, no, it's not one of my first choices, but it is interesting. And how many of you are out there look at Zip or have it on your watch list? Probably lots of you. Right?
We had a lot of people talking to us and asking us all the way down to that big bottom.
Yep.
And buying it on the way down, even though we said keep out of it.
Exactly. Yeah.
All right. So just have a look at that decline that we can see on the monthly chart, and this is where you're identifying stocks that have had these huge falls, and the idea is to have a look and understand in hindsight what you're trying to identify. So first of all, there was this bounce off the bottom on the monthly chart, and I'm just going to expand it up for you. because Pedro's squinting, so we don't want that. You're too young to
It's
have
not because I'm tired.
wrinkles. So looking at this one here in July 2022, a lot of people got pulled into this suckers rally. So this is what you want to avoid. One, avoid the catch the falling knife. So many people that were writing into the show asking us, when is this stock going to turn around, and it was still falling down. This is the suckers rally, because what happened after that? You know, look how many, this was actually back in July 2022, and then we're all the way over to October 2023, and the stock's still going down. So eventually, and it's not a small amount either, it looks like it is on the chart, but I'm just going to expand this section up a bit so we can have a good look at it. And I've just lost that there for a minute, but the fall from there all the way into the low was actually 85%.
Yeah,
so it's huge, but now it's starting to look really nice. So this is what you want to see. You can let the stock go. You will have heard Pedro, myself, Dale, Phil talk about how we don't really care about this, you know, move down the bottom, let the suckers take that. Just wait for some confirmation that it's going back up again. You haven't missed anything, because look at the potential upside that's there. So
yeah, and if we can highlight the earlier bars, right, on that fall, they were all closing on their low.
yeah, these here,
all of those bars, all of those monthly bars,
20% falls.
20% falls, and all of the closes are the little dashes that are pointing towards the right hand side.
Yeah,
They're all on the low. There was no reason to get in during that stage at all.
So that's what we're talking about,
if
isn't
you got FOMO
it?
and you want to buy cheap.
Yeah, well, that's two good reasons. There you go.
Yep.
People will always find them.
So,
I'd say
so
they're
here's an
valid.
example, and this one has got huge upside. So potentially, it's trading at the moment, you know, above my dollar line, which is nice. So it's above $2 actually. So this one has got the potential to at least double. Will it go 10 times? I can't say that in the next couple of years at this point, but this is what it's all about. We're going to make that assessment right now.
I like it.
The next stock is Kogan, another one that's quite popular. We'll just go to the monthly chart first and have a look at that. This one fell significantly. What we like about these sort of stocks is that what they've done in the past gives you an indication of what's possible. So here we saw 500% growth. From this low, we've seen 200%. And obviously in COVID, there was this big rise that occurred. Maybe it will do that again, maybe it won't. That's the question mark at the moment for Kogan.
There was a lot of speculation during that period. Everybody was buying.
It was huge, wasn't it?
New
But we got
computers and screens and mice.
Yeah,
and,
online.
But we can see that there's a 200% rise off that low there. This is the low in 2022. So it could do that again, couldn't it? It's quite reasonable to say that it could do that. So off this bottom here, if it finds support and starts moving up, you know, the 200% level just happens to be right at a resistance level. So, you know, I'm quite comfortable with suggesting that if it finds support and doesn't continue down, we could see it move up in that direction. But again, it's not about buying now, it's about getting that confirmation first.
Yep.
But it's looking good, and I agree with. I think that looks like it's going to take off like a rocket. So next stock.
All right, so Pedro, do you want to have a look at this one?
Yes, so TPG, this is a telco, and again, so let's expand out the monthly chart. If we were to look back at this stage back here, back in 2016, it had that high of $12.30, and then it had this very bearish bar down there. Now, you might be thinking at this stage, okay, well, it's pretty cheap. It used to be $12.
Now I can get it for
Now I can get it for, you know,
$8.30.
yeah, exactly, $8. What a bargain. But look, only a couple of months later,
it halved.
It halved again. Only to then go sideways. Now, you could have traded. There is a rule around this area that you could have used to get in, and if you were trading it, you might have been able to get out of it, but it's pretty much just gone sideways. The fact is, though, that it hasn't really dropped much below these levels here. So if we can just draw out a horizontal line.
Yeah, it's really hanging on, isn't it?
It's hanging on to around this level, around that $4.60 to that $4.90 level. A little bit of a concern is that it has fallen below that $4.90, but it is finding some support around that $4.40. I'd be watching this one, because if Telstra does good, and we know that communications is a sector that could actually be involved in the more of the infotech type things, if they get into the IoT sectors, then this stock could look promising.
I mean, one other thing to think about, just having a look at that chart again, we can see that sideways consolidation that occurred back here. This was way back in 2010, and you've got to learn from the past to determine what's going to happen in future, which is what technical analysis is all about. So looking at this rise here, we're talking about 900%. And this is actually well before COVID. So if this could be repeated, and I'm not saying it can, but we're seeing the similar sort of consolidation, but just on a much grander scale here. Sometimes this is as good as indication as any. Could we actually see this share price going, 100, 200% to that high? It's possible.
I think it's reasonable.
But it has to get through some hurdles, obviously, to do that. So this would be September 2023. Once it gets through that level, I think it's probably, reasonable to say that it's on its way.
I think, TPG's done a lot of acquisitions over the last decade, so they do take a toll on a company, the integration and stuff like that. So I think they're poised now. They're one of the biggest telcos in Australia. They're huge.
Great.
What they're doing. So I think there's some great potential there. But we do need to move on to the next stock.
All right, let's have a look. So we're trying to find something that's going to go 10 times, but we know that we can find stocks that will at least double, and that's the interesting thing here. So we've got one of my favourites here. This is Worley. And what I actually found interesting about this stock, just to digress a little bit, I've got a little bit of extra research on here, which I just wanted to sneak in there. This is actually Santos. Now, I know that Santos didn't, this is the straight line or the line chart you can see over the top of it. Look how Worley followed Santos through this period here. But Worley is actually no longer listed as an energy stock. I don't know why it stayed there so long, but it got boxed in there, and when energy was being sold off, it got sold off. Now it's actually in the industrials, and you would think that should actually help it, given the work that Worley, great work that Worley is involved in. But, obviously it's in that space, so where it's servicing those companies. So. But at the moment, it looks like it's finding support, and it hasn't been sold off heavily at this point. But if we look bigger picture to where the catch a falling knife scenario has occurred, this stock was in a long-term decline until, like the rest of the mining sector, until early 2016, and it really hasn't done what it could do as a potential just yet. So I still see with this stock there's a potential for it. Now, I've actually got an overlay on there, so I've got to get rid of that. Sorry, just a moment. I'll do that and get rid of it. Yep. That helps me to clean that up a little bit.
Yep.
And you can see there, could it go 100%? I think, this could double. There's a potential for that in the next couple of years. So I'd be watching Worley.
Especially if mining goes up.
And it has traded around those levels for a long period of time back in the 2011s, 2012. So if it's traded at those levels before, it's reasonable to say it could do it again.
All right.
Now, I know the next stock you've got is quite a volatile stock. So
now, Pedro and I were talking about this one because this is the classic catch a falling knife happening right now, and how many people are trying to buy it cheap.
This is one at the moment. So we had a look at those stocks beforehand, what they did, and how catching a falling knife wouldn't have helped. This is happening at the moment right now. So you'd be forgiven to, think that it's very cheap at the moment relative to its $90 value.
Would you forgive him, really?
I mean, you have to forgive. You can't unless you're well versed with technical analysis. We've all been there before. I've been there. We've thinking that it's something is cheap, and you want to. Of course, you're accustomed to think that in the shops when you get something 50% off, you got a bargain. But anyway, I digress.
Let's say that someone put $20,000 into them at $55. They're heading towards a situation where they're going to have half of that. So that's 25 grand that they've lost, which they would have been better off investing in themselves and learning how to actually not do this.
No one said ignorance is cheap. Ignorance is actually expensive, but we
point.
do get lots more emails on a stock when it's falling like this. Like people going, "Oh, can I buy this now? I think it's found some support," because they're trying to get that lowest price, and that, as you guys just said before, that's fraught with danger. You don't try and get the lowest price. You're trying to get the safest price, and one where the direction is up rather than still down. So
it's the highest
risk. You got more to say on Min?
Yeah, let's have a look at the chart a little bit, so then you can actually see what we're talking about. Let's expand out the weekly chart, and it's really closing on these lows here, and it's just dropped below these
It hasn't really proven that it's stopped falling yet, though, has it?
Nowhere near. And if anything, it's got a fair bit more to fall. It's dropped below these levels. I think it's reasonable to say that
But this is actually a stock that could come up in the next 6 months, though, couldn't it?
it's one to definitely put on your watch list. It is trading at a significant level at the moment. You can see that it's that previous resistance level, although it could drop down to around the 25.
Mate,
$20
I might put bets on it might hit $10.
Which is amazing to think, so it was nearly $100.
amazing.
I know.
Mm.
And you're going to get the stock for a much lower price.
It does, yeah.
So to me, that's a perfect example of don't catch a falling knife, everybody. Stay out of min at the moment, but when it does find some support, it'll be one that you can probably 10x your profits on.
Yes.
But okay, so we've got a couple more.
We do. The next one we've got is, now this is an interesting stock. This is Terracom, and there's some what I found striking about this one is not just the chart, but reading what's going on. And Macquarie is actually now a significant shareholder. They've got 5%, and just over recent times, the board it looks like the shareholdings have changed. So it's good to do a little bit of research with some of these smaller stocks and just find out what's going on, if there's anything happening with their shares.
Where there's some smart money going
Yeah,
in.
with the bigger stocks doesn't matter so much, but it does with the smaller ones. So
yeah, and you can find that in market index, actually, just FYI, guys. If you scroll down to the bottom, you can see who the shareholders are. I do that quite often just to see where the smart money is.
Good idea. And now, look, we look at the history first of all to give us an idea and understand what's possible. So as we did on the other stocks, just a rough estimate, there's an 800% increase there on this one. Another low we've got here is 400%. The smaller rise here we've got is about, that was actually 2,000 off that low. It looks smaller, but it's it's all relative, isn't it, to where it starts. But look, just thinking about this, you know, you can see that how stocks start off after these lows. They sort of take a while to get going, and then the rise starts to increase a little bit, and then there's this absolute blow off like this person talked about before that rang in, and then you've got, you know, you just sitting pretty at that point, just waiting for some confirmation. And see how what Dale was talking about before, eventually you get a low form, and that gives you a place where you could put a trailing stop loss under that. I thought I'd just add that bit in for the previous person that asked that question. But looking at this, this is one of those stocks that could give you that opportunity to get some gains in there, some serious gains, but it is a low liquidity stock. It's only trading at around 17.5%. You need some serious confirmation. So the rise to that prior high is about 570. Do I think it will get there? Horizontal line across here tells me it could go, you know, sort of around half of that run, but it needs to trade through this high first. So that high in August 2024, before we can even say that. So there's your confirmation, you've got to get that. But there's a whole series of rules and things we want to confirm after this bottom has occurred before we'd even be willing to get in there.
Okay.
But I think it looks interesting. That could be a dark horse.
It could be your dark horse. Now, the next stock, you're not allowed to say it's my favourite stock. Okay?
All right, I'll let you say it. Would you like
No,
it?
I'm not saying it because you guys keep telling me, because I've talked about it a few times.
We've called it a dog stock plenty of times.
Well, I have, and I said it's on my watch list and I'll keep watching it because eventually it'll turn. So, but it's not my favourite stock.
Eventually you'll be right.
I'll take it off your hands.
If you keep
Dale.
predicting, you'll always be right. So, can we just get into the stock?
Can't stop
Pedro,
laughing now.
please put some
I've
sensibility
had too
in
much
it.
sugar. They fed me up before the show. All right, now let's have a look. Weekly chart on the right there, you can see the pullback. We've only got 1 week down, and then this week's obviously nicely, strongly up.
Yeah.
That's the first sign of a potential move up, but we've got to go dig deeper. We can see here that it's spent half of its time rising and half of its time falling. It's not really telling you that it could just trundle sideways for a while, is what I'm saying. That's the real risk with these type of shares. But does this one have a chance to do a 10x? It does.
Yep.
So, you know, we're talking about, you know, this to $10, there's 700. It could go 1,000. Like,
10x.
you know, where could it go?
Yeah,
It's just
yeah.
mind-boggling. So let's just quickly, before we move on, just quickly look at that weekly chart. We've got a hurdle here in the short term
$3
from these lows here at about $3. So, but that could be a good level to just sort of look at. There's where the first rise could go, somewhere around 3.
Yep, I agree.
You
I like it. Well, that's my favourite.
But this
That's
is
your
sort of
there you go. I'll
this is
take
sort
it.
of getting down to a bit more speculative, and it's not for everybody. These stocks are, harder to trade generally. They're higher risk. You've got to have really good stop losses and good rules. So, just looking at another one here, Tyro Payments is an
Hang on,
interesting
did I
one.
say next stock? We don't have time for another stock.
Don't we?
Oh,
So,
no.
God, she's trying to sneak one in.
Good try,
Jeez,
though.
I missed
You
out,
are.
didn't I?
Geez, you are
I thought I was
sneaky.
going to get
Next
another one
time,
in
Tyro.
there.
Yeah, no, we've run out of time for stocks, but
Damn.
we've got much more in the second half of the show for our Talking Wealth viewers anyway. But that is it for that amazing stuff, team, with some of those stocks. And Pedro, you can have that Appen as your favourite stock from now anyway. Now we have more amazing content to come, including more stocks. So stay with us as we'll be right back after this short break. This week on Talking Wealth, Naren Ariel returns with expert advice on crafting impactful books.
Talk about the positive outcome that can happen if you read the book and apply the learnings from the book. That's where the magic happens.
Is your mindset holding back your money? Let Dr. Catherine Gilstein help you declutter your financial space.
If you have to make a financial decision, how do they make you feel? Are you stressed about them? Are you not stressed about them? Is your money controlling you, or are you controlling it?
Discover the secrets behind leading a company to $2.1 billion in assets with Chris Ball.
That's where a lot of businesses fail, is they just run out of cash. And that doesn't mean that they're a bad business. What normally means they're growing quicker than they can get the money in.
Get your free 7-day trial now to watch this and more.
Only on Talking Wealth.
Well, that amazing content you just saw is going live on this Thursday on Talking Wealth. Now, moving on, if you do want to talk about a stock or ask a question, pick up your phone right now and give us a call on 039290 9988. That's 03 for Melbourne, 929-09988, or you can text the number on your screen. Now, whilst we wait for your call, let's get into our next email. Now, Ross is asking, hi guys, given what's been going on around the world and seeing the conflict, it has sparked me to research into the world of defence stocks. One Australian company is Drone Shield. Can you tell me if I'm on the right track and share your thoughts on Drone Shield? So I'm going to go to you, Pedro.
Oh, Drone Shield. Now, this was Phil's hot stock tip a while back, and it actually
Maybe that's
went
where Ross got
quite
it from.
Well, it may be. So, good pick. It has fallen quite heavily if we have a look at the chart since then. So, this is another example of knowing how to buy, but maybe not knowing how to sell, because it did have this large rise up to that $2.60 level, only to then close around that 50% of that last bar's range. So that was signaling weakness already. Then you've got this bar here, which it tried to reverse, but it looked like it was only kind of filling this gap back here. And now it's on the monthly chart, it's pointing to the downside so far this month. So really we need to go to the weekly chart for these types of stocks, since they are so volatile. It's pointing down. I would say that it's coming down to test around this $1 to that 90-cent level again. But it could be a great one to catch on the next run up.
What do you
These
think?
more speculative type stocks, it's good to actually understand why they reversed down. Because it may be important for when you're going forward, because if there was some sort of promise to the market or fanfare and it didn't come off, it may mean that it's not going to go anywhere for quite a while. And some people will be thinking, I might be able to get in on it because I missed it, and all these other people will forget the FOMO side of it, and just you can watch it, but you're better off to look for another stock quite often, because there are so many cases where we see stocks make these sort of moves, like you can see on the chart that Pedro just showed you before, this sort of blow-off effect, and then they don't do anything for a long time. But if it trades above here, you'd have to just make a call if it was that you wanted to trade it, maybe you sold out of it and you want to get back in at some point. The risk is sort of around 17% if it stays where it is now, if it keeps falling. But you've got to wait for that confirmation, as we talk about, to go through prior highs to prove that it's going back up and there's some money in it.
So is
and
Ross
look
on the right track?
Do you think?
Well, I would say, depending on Ross's risk level and how of an experienced trader he is, This is not for the beginner trader, and I would be putting a pretty tight stop loss on it. If you were to enter.
Cool. All right, we now have a caller on the line. Welcome to the Australian Stock Market Show. Who have I got on the line?
Hi guys, it's Jack.
Oh, thanks for calling in, Jack. What's your question for us tonight?
I've been briefly looking at Northern Star Resources. Haven't done too much analysis, but I noticed there's a potential resistance level around $15.40, and it could be there soon. Just looking for your guys' thoughts. Thanks.
All right. Now, is that short, medium, long-term type of trade for you?
Long-term, 12, 18 months.
Okay, no problems. Well, the guys have brought that up. Thanks for calling in, Jack. So, Janine, Northern Star Resources.
Northern Star miners have done, quite well recently, gold miners, but they are still risky, and that's the challenge with these gold stocks. But I can see that you've identified a really important level around that 1540, which is great. So I'll just mark that on the chart there for you, so you've got a better idea of what I'm talking about. But 1540 is up around here, but if once it goes through that level, then it's more than likely going to challenge that all-time high. All-time high at the moment is currently it's November 2020, and the high is about 14 or 16.80, I think it is, or $17. So it's still got reasonable amount of upside to the high. I don't mind it, actually.
Yeah. What do you reckon, Pedro?
Yeah, so we'd have to see what the upside exactly is. So let's put a price range percentage. So if you were to enter around this level, you've got about a 17% upside. Whereas if you were to put your stop loss around that that $12.70 level, you've got around a 12% risk. So is that ratio good enough for you? For me personally, I would like to see a little bit more upside.
Are you suggesting he get in now at that level, or are you suggesting he get in above the green line there, that resistance?
I would want it to fall a little bit more, and then find some support around that $12.70 level, or even around that low of $13.70. And then trade up and get me an entry rule, so then I've got more upside, because I agree it's found resistance multiple times around that $15 level, so that's very strong resistance.
But each time it's gone to challenge those prior highs, like we've got this high here, if we look back in history in July 19, it's gone through. We've got a high subsequent to that in the years following, 2, 3, 4
after a huge
peaks
fall
through. So after a huge fall, so we could see it shoot right through. It could just as easily go through to $19, $20 if it gets above there.
It could.
So is this obviously he's talking a longer term trade, so 18 months plus. That's sort of what he's looking at. Is there the potential for that on this stock?
Yeah, I think that there is. If it, like Pedro said, if it starts trading down from here and takes out this prior low, then I'd wait until you can get an entry at a lower price. But if it takes off through this high, I think it's probably more likely to continue up, like the gold price has kept making new highs.
Yeah, because obviously, gold and interest rates have a correlation there, and you can explain it if you choose to, because obviously I don't get to speak to Dana Samuelson anymore because you and Phil do that, our gold expert that's on Talking Wealth.
Yeah, well, look, there's an inverse correlation there, but look, I don't get too hung up on that side of it. You can plot that on a chart and prove it to yourself rather than just listening to us. If you would want to, if you're that crazy and you like to play with charts.
Listen to us. Got it, anyway. All right, well, our next question is from Ben. He goes, what happens when you get a buy signal and the stock turns around on you? Well, Ben asks, hi team, can you take a look at Jed Education? It broke out of a sideways pattern recently and pushed higher through previous resistance around $1.33. Since then has fallen. I'd like to hear your opinion on how you would manage this, and is G8 still a good stock? So it broke up out of a pattern to give a buy signal, but then it turned around. So how would you manage all of that? So I'm going to go to you, Pedro.
Yeah, well, first of all, you'd be setting an initial stop loss. So if it has fallen below that stop loss, you'd be out. You're not going to be right all the time when you're trading. You are going to have those times that you can put all your analysis on the chart and it just turns against you. That's why it's important to kind of have a few stocks going. That you're not going to rely on just one. But let's have a look at the chart and see where Ben is talking about. So it looks like he's talking about this sideways pattern over here, and it's broken above that $1.30 mark, only to reverse heavily, and now it's just trading sideways. If this was me at the moment, I'd just be, I wouldn't be out personally, because it's not showing signs that it's pushing heavily to the downside. It is finding some support around that $1.20 mark. So it could actually come back up and trade above that level. There's a lot of selling or automated selling signals that once a stock trades above that previous resistance gets triggered. So, support and resistance is the most basic form of technical analysis out there. Everybody knows it. And as soon as a stock would break above those levels, you may start to get a bit of a sell signal from.
So what you're saying, that big outside bar that fell pretty heavily, that could have been that, but it also could have been an announcement on it.
Reporting season,
Reporting season.
a reporting season blip potentially, and often stocks will go down like that during reporting season and then turn around and go back up. So like Pedro said, I think I'd just sit and wait because it may turn around and keep going up.
All right. Okay, now we've got a text from John, and John says, "Hi guys, there's a huge upside on S32 to the all-time high. What do you guys think?" Oh, geez.
Huge upside.
To the all-time high.
That
That's a
wishful
huge
thinking?
move on S32.
It
But
is,
do you want to bring it up, Janine?
Yeah, looking at the chart there. Look, unfortunately, S32 was going beautifully as it rose up, and then just obviously on some information was sold off heavily. But look, it may find support where it is. $3 is actually quite a strong level given the support across the left-hand side. So it needs to, I'll just expand that weekly chart up so we can see what's going on a shorter time frame. That high there, 317, it really needs to break above that. But even then, there's no real confirmation as to that it's going up. And I think it needs to get back through here really to prove that it's on its way again in my book.
What I like about S32 is that it's a quite diversified company. So it's actually got quite a few mining operations in different commodities. And I do like the fact that back here, back in 2022, it had this huge gap, and eventually it did go ahead and fill that gap to then trade down. So we've got another gap over here in 2023, and we've got a more recent gap. We've got another gap that it's filled over here, and then we've got this huge gap. Does it look like an overreaction to you? You know, to me that does look like it's fallen heavily. It now looks like it's reversing to come back up, and at least, to the very least, I think that it's going to fill that gap and potentially fill that gap back at $4.40.
Well, I mean, it's annual report, the annual report or its half-yearly report that it put out wasn't super bad, but it wasn't super good. So there were some downgrades that it came out with last month or whatever it was, but it wasn't necessarily super bad. So, and you got to think of a stock that took off like it did before that. You got to think there's some buying into that, because why, you can't tell me the big end of town didn't know the report wasn't going to be as great as what it was, because they said, oh no, we're going to drop back our earnings a little bit. I think it was, I can't remember, but like 7% drop or something. It wasn't huge. You can't tell me that they were buying big and all of a sudden got surprised about that.
Yeah.
So, to me, it is looking good, but you are right. It does need to basically show me the money time right now, isn't it, for that stock?
Definitely.
If it's going to go up, it's got to go up now, not in another month's time. Because otherwise, if it's still
the
going
longer
down,
it spends sideways, the more likely it is it could drop.
Anything else you want to say on S32, guys?
No, not at the moment.
No, I'm good.
No, you're all up. Well, anyway, remember to show your support for our channel and smash that like button. Now, if you do enjoy watching our show and you want to see loads more of our content, click subscribe now. Also, comment below this video too. Now, subscribing helps find our channel so we can help others too. Now, before we let you go, what was your favourite part of the show? Was it for Pedro's hot stock tip, or our topic for the night, or was it a viewer question? Let us know by commenting below this video. And thanks to all of those who are watching on YouTube and Facebook. If you are watching on talkingwealth.com, stay tuned for more exciting stock picks, insights and strategies. We'll be right back with that and more. Next week in our main topic, we get into sharing with you some awesome trading ideas to prepare you for the impending bull market. Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. And if you love our show, remember to hit that like button now and subscribe to our channel. This shows your support for the team that puts in the effort each week into bringing it to you. If you are subscribed, then you'll always know when we go live and put up new content. As always, thank you for joining us. For now, goodbye, good luck, and good trading.